Your office vacancy rate in the major cities is around 20%. So we're talking about risky loans. You're going to start seeing big defaults on loans as trillions of dollars of them come to pass this year and next. It's be over $2 trillion worth of commercial real estate loans. No one's talking about this because they don't want you to know how bad it is. Long-term yields in Japan hit record high after dismal bond auction. Yeah, no kidding.
In today's news recap, will gold prices continue to rise in 2025? Goldman Sachs' Lena Thomas stated that gold is likely to set new records this year. Goldman Sachs Research forecasts that gold will climb to $3,700 per troy ounce by the end of 2025, driven by consistent monthly purchases of the precious metal by central banks. The commodity is also expected to rise as ETF investors boost their holdings in anticipation of interest rate cuts and amid mounting recession fears. Goldman Sachs Research projects that in the event of a recession, gold could climb as high as $3,880 per troy ounce. Also, Michael Armbruster, co-founder and managing partner at futures brokerage Altavest, said, "There is nothing telling us that $3,500 is a top for gold. The trend is still up, and we are now experiencing a normal correction in a bull market." Trevor Yates, senior investment analyst at Global X ETFs, explained that the recent pullback in gold prices was due to positioning and flows rather than any fundamental change in our bullish gold thesis. He added, "We continue to see robust physical market demand driven by central banks, coupled with rising stagflation concerns and elevated levels of uncertainty supporting the gold price." As we previously discussed on the channel, Dalio's Bridgewater bets big on gold. Bridgewater Associates, the world's largest hedge fund, co-led by billionaire investor Ray Dalio, recently revealed a significant investment in gold. According to the 13F filing with the Securities and Exchange Commission, the billionaire hedge fund manager initiated a new position in the SPDR Gold Trust during the first 3 months of this year, purchasing 1.1 million shares valued at approximately $319 million. This move represents a notable return to gold after Bridgewater exited its previous holdings by the end of 2023, highlighting Dalio's continued conviction in gold as a crucial hedge during times of global economic uncertainty. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
So the Congressional Budget Office put the price tag for the bill at nearly $4 trillion. And again, the 30-year Treasury hit 5.161 today. We're backing down a bit. Oil prices, they're down. You know why? OPEC Plus, they came out a couple of weeks ago, said they're going to put more oil out there because they need the dough. Now they say they're even going to put more out there. Bitcoin. As you well know, the Trends Journal has been very bullish on Bitcoin and extremely bullish on Bitcoin when the Trump family got involved in it and all those crypto club members gave Trump that $100 million plus to run his campaign, and on and on and on and on and on. So we've been saying week after week after week since Trump got in, watch Bitcoin bounce. And now, as we go on the air, over $111,000, hit nearly $112,000. And well, the people that invested heavily in it, like my friends Max Kaiser and others, God bless them. They were really on top of this, man, and now they're on easy street. So this thing's going to keep ramping up. Yeah, when prices go down, nothing goes straight up and down like gold. Gold went down today. It was down $22 but it's still near the $3,300 an ounce range, 3,291 as we go on the air. So that's where we see it going. And again, the facts are all here, what's going on. We're going to see dragflation. We've been saying this. You go over there in the UK, they just came out with the inflation numbers, higher than expected. Consumer prices rose 3.5%. And of course, they're much higher than this. The government's rigging them so they don't look as bad as they are. Meanwhile, as the economy goes down, you're going to see more and more dragflation. This is an important article that you're going to see in your Trends Journal. Surge in loans to non-banks raise fears of systemic risk. Now, this is an article from the Financial Times. U.S. banks lending to buyout firms and private credit groups have helped fuel a steep rise in loans to non-bank financial institutions, even as regulators fret that growing ties between the two sectors could become a systemic risk. Loans to non-banks, you ready, reached about 1.2 trillion by the end of March. Commercial loans were up 1.5% over the same period. Okay. You got to look at what's going on again that nobody's talking about, and that's the office building bust.
In today's news recap, gold storms back as Chinese demand roars in. The Dragon's bid is back. Gold's bounce back to $3,300 isn't just another dead cat rally. It's a statement, and once again, China's in the driver's seat. After flirting with the psychological floor just above $3,100 last week, gold has roared back to where it closed April. But this time, it's not Western hedgers or ETF flows leading the charge. It's a familiar heavyweight, Chinese onshore demand. According to Goldman's flow tracker, Shanghai's night session has come alive, triggering a classic COMEX sympathy bid. Open interest on SHFE is back at all-time highs, with gold and silver both seeing a sharp jump, plus 3% and plus 4% respectively. That kind of synchronized positioning doesn't happen by accident. More telling is the resilience of domestic Chinese traders. Despite the 8% drawdown from the recent peak, they held their fire, refusing to dump positions. That's not momentum chasing, that's conviction. And when the SGE/LBMA-RB lit up, global buying interest reignited. Chinese physical imports, ex-PBOC, also just clocked in at a one-year high for April. That's impressive given gold's elevated nominal levels. It means the physical premium on the Shanghai Gold Exchange, SGE, isn't just holding up, it's punching through resistance. And the market setup is clean. Ex-China hedge fund positioning is light. And CFTC data shows specs are flat, not leaning long. That makes the skew look dirt cheap. 6-month 25 delta risk reversals are trading around 2.25V with 6-month implied vols near 19.5%. I think you want to own that optionality. Vol should outperform if we break new highs, and the Vanna tailwind is real. Bottom line, this isn't just a bounce. This is a reset. The physical bid from China, the clean slate in Western positioning, and the quietly persistent vol buyers all suggest one thing. The gold bull isn't dead. It was just consolidating. And the dragon just hit the buy button again. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics Handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
Your office vacancy rate in the major cities is around 20%. So we're talking about risky loans. You're going to start seeing big defaults on loans as trillions of dollars of them come to pass this year and next. It's be over $2 trillion worth of commercial real estate loans. No one's talking about this because they don't want you to know how bad it is. Long-term yields in Japan hit record high after dismal bond auction. Yeah, no kidding. Channel profits dropped sharply. All right. Every week, we've been saying this, you've heard us say it. For the last few years, we're showing how luxury sales are going down because the fish rots from the head down. This is serious. And they raise the prices on everything. So what we're saying is that the COVID war has changed the world. The West and China were buying up luxury like crazy. They're not anymore. So you look at the facts over here, and April home sales in America slowed. You ready? To the worst pace going back to 2009, the Great Recession. And then, again, you saw the 30-year mortgage hit almost 7% a while ago, and now it's probably back up near that with the things going up. But you ready for this? The home ownership is out of reach for many Americans after years of surging home prices, is how they write it in CNBC. The median U.S. home sale price, you ready? Jumped 53%. So going back to the economy, Ray Dalio says the fear of the bond market as a default has become, as deficit becomes critical. Yep, I think we should be afraid of the bond market. And now they're going to pass this bill. It passed the House. We got to see if it's going to pass the Senate. And again, week after week, we're giving you in the Trends Journal whole sections by Joe Duran and Ben Davis on AI. And now UBS deploys AI-created analyst avatars. Google introduces AI chatbots. OpenAI to buy Ivy's startup. All right, one after another. And as I talked about how the people can't afford to buy a home, the 10 richest Americans got $365 billion richer. Yeah, that's great. Okay. Let the rich stay. Hey, you know who we are? We're members of the club. There's an article in Russia Today, RT. U.S. tech giants accused of silencing free speech. You got it. We've been silenced.
What do you think of Gerald's take? Is he spot on, and will gold and Bitcoin continue to go up, or is a major top near the corner? Post in the comments section down below your honest opinion. Subscribe if you have not yet done so, and check this video right here because it's a perfect fit for you. I'll see you on the other side.